Hello everyone and welcome to ATFX. My name is Gonzalo Cañete, and in this occasion, this video is about the summary of the week, 10th of November, Friday evening. Hopefully you're gonna see this video by Monday and you're gonna get a fresh view of what's the global situation of all markets, equity, fixed income, commodity, and even Forex currencies. I'm gonna give to you the reasons, fundamental reasons behind this situation, but also technical levels that you can follow. Please keep in mind, this is not an advice of any kind, and I'm not pretending to influence your criteria in terms of investments. If you are planning to invest, consult to a financial advisor first. Now, let me review my notes to give you a whole picture of the results during the week. This is the economic calendar by investing.com. You can use any other economic calendar just to trace the results, but mainly the most important ones, I will say, Germany. Germany was giving the factory orders 0.2, and the expecting result, it was minus 1%, which is a good result. But however, industrial production was dropping to 1.4%, minus 1.4%, when the expectation drop, it was minus 0.1%. So again, probably Germany is in line with what we were expecting. It's a recession, economical recession. In the case of US, again, just a quick recap of the previous week. We ended the week on Friday with a strong market. The market basically was rising. Wall Street was rising strongly by the end of the season. And the reason was the bad results presented by the labor market in US. Even they caused the comments from Federal Reserve. I was sharing with you in social networks some comments from Federal Reserve, like Ascaris. It was mentioned that it was really useful results. It's interesting to see that he referred to these results as useful, but we clearly can see that Federal Reserve plus also Wall Street, both of them are in the same size. Both of them want to stop this. They want to just find an excuse to reduce the pressure on the monetary offer and start to give some stimulus or some incentives to the financial markets and keep Wall Street happy and rising. But still, this week we heard many comments from Federal Reserve, also different members from Federal Reserve, making in one way or another reference of the need of increased interest rates again, perhaps. So I'm gonna give to you also a summary of all of those comments. Now, I was saying Germany was giving bad results in terms of industrial production. It was minus 1.4% against the expectation, which was minus 0.1%. So really bad results compared with the expectations. In the case of Europe, we got PMI, it was 46.5, expectation was 46.5, but still, price of manufacturing index is still under 50 points. So everything is below 50 means contraction in the economy activity, and everything below 50 is expressing expansion. So in this case, again, Europe is still below 50 on the PMI and index. So basically, we see that Europe is still giving certain indications, macroeconomic indications of contraction. In terms of UK, United Kingdom, one of the first results, it was construction PMI, 45.6 versus 56 expected. Again, negative, worse than expected. And still, the expectations was 46, below 50, indicating also a contraction in the economy, in this case, in construction prices. Construction also is in line with what I bring to you in one of those reports a few weeks ago. It was the homes prices in UK was getting flat for the last few months, and even it was dropping the prices recently, which is in line with the expectations, again, because if the interest rates are rising and UK is one of the countries with highest inflation levels compared with the rest of Europe and United States, obviously the monetary policies should follow high rates for the coming periods, and therefore it was one of the countries in line with more pressure from a monetary perspective, and therefore mortgages become or should come more expensive, and therefore defaults on mortgage, probability of default on mortgage were rising, and then the market was adjusting to that expectations, I will say. Retail sales was actually surprisingly positive. It was 2.6 versus 2.4% expectations. And we also got the Bank of England speech, giving certain, I will say, congratulations themselves for the low inflation. the inflation is still decreasing in United Kingdom. It's actually getting in line with the European Union and United States finally, because it was one of the countries who was keeping the high inflation for a longer period. Don't forget that 1 year ago, the inflation in UK was around 11%, which is crazy. In terms of the biggest economy, second biggest economy, and the biggest economy, we're going to talk about US and we're going to talk about China. Exportations in China was minus 6.4% against the expectation minus 3.3%, which is bad results because it's obviously a drop in the exportations more than the double that expected, no, almost the double than expected. But importations, in the other hand, was rising to 3% when the expectation was minus 4.8%. It's giving us a superávit and a positive trade balance. And it's also indicate that China actually it's becoming a kind of Western economy. In terms of the internal demands are rising, we can see that consumption internally are getting stronger. And obviously, these changes on the trade balance are showing certain strength in that sense too. However, the results provided on Thursday, between Thursday to Friday, was inflation, customer price inflation. It was minus 0.2% versus the minus 0.1%. This is actually deflationary risk. So we're talking about inflationary risk in the case of US. We're talking about deflationary risk in the case of China. And the PPI, the Production Prices Index, is actually minus 2.6%. versus expectations of minus 2.7%. So in both cases, we can see the prices are contracting. So again, is risk of deflation, but also in the case of PPI are actually not that bad. I mean, the expectation was minus 2.7 and the result was 2.6. In summary, that's the whole picture of the results of macroeconomic results during the week. Now it's time to take a look to the charts and see what exactly is happening. Also, please pay attention to the comments from the head of the Federal Reserve from San Francisco. The comments she has made, it was very interesting. She said, I'm unsure if policy is restrictive enough at the current settings. So she's suggesting that maybe the policy should be even more restricted monetary policies, and that means probably increase interest rates once again, 25 basic points, which is the next shot for December. Also, she will say, if financial conditions ease it more, the Fed will need to take note. And also, if inflation doesn't ebb further, the Fed will likely have to hike again. So she's openly saying that maybe the Federal Reserve need to hike interest rates again. I'm sharing also with you the more comments from Federal Reserve on my personal profile on LinkedIn, so you can just find it and you will see the comments I publish every morning, fresh comments about what's the last update and news from different economies and worldwide, basically. So I'm just compilating all comments from the Federal Reserve and giving to you. We got also here, University of Michigan is giving the inflation expectations for the next year and also for the 5-year inflation, preliminary inflation expectations from the University of Michigan. Guess what? Is giving 4.4% inflation expectations for the coming year, 1 year in advance. Versus the estimation was 4%. The final result published by University of Michigan is 4.4%. So the scenario is getting worse than expected. Even in these cases, the prediction or preview of the possible inflation in the coming year, which is not good at all, because that means that they're gonna probably need to keep the interest rates high or even increase the interest rates once again. Now, finally, let's take a look to the markets and let's take a look at what's going on. So even with the comments of the head of Federal Reserve of Chicago, even with the results of Michigan University, right now we got a Standard & Poor's rising to 4,400 points, as you can see there on the chart. Super positive. I believe one of the reasons why the market is reacting really positive lately, the last couple of days, is the rumors or the perception that Israel war is over against Gaza, because even United States are pushing Israel to make a ceasefire or even to end with the military campaign in Gaza. So this is probably one of the signals that we're waiting for, because don't forget that the market was dropping aggressively when everything started between Israel and Gaza with the conflict at the beginning of October. The market was dropping massively based on a few threats. First of all, Iran was mentioned that if an invasion happens in Gaza by Israel, Iran will take measures. One of the main risks from Iran is just block the exportation roads by the Red Sea, and also closing the Hormuz area. They can just basically close the Hormuz area using the army. They close the exportation road for oil from Emirates and from Saudi Arabia. So that was one of the biggest threats that could affect the global economy. Plus, obviously, an increase or escalation of the conflict between countries in the region, Middle East, which is exactly what happens in the spring, Arabic Springs back in 2011, 2012. Libya, Syria, Iraq, all these countries were in a kind of convulsion, and the prices, oil prices, were rising to $100, even $125 by then. In this case, if Iran was closing the exportation roads, obviously the increase on the price will be massively higher than that. So again, we got SP 500 rising, even with certain gaps. As you can see, 2 consecutive gaps for the last 2 seasons, bullish gaps left there. So it means like the price is rising strongly, and it's breaking up the resistance at 4,350, 4,400. It's breaking up those resistance. It's breaking up also the moving average of 200 here. It's also breaking up the global trend that we were expecting, which is kind of this one. Let me see if I can. Yes, exactly. That one. Because it was a kind of bearish channel, but not anymore, because obviously the price is moving away from the channel, you see? So I guess now we just need to wait, but probably the next target is 450 points, as you can see on the chart. Clearly saw 450 points. And let's keep an eye on this, because if the market is rising based on the expectations of the end of the conflict between Israel and Gaza, whatever happens during the weekend, that is giving to us the sensation, the feeling that actually is not over, it could just make a market drop aggressively on Monday. So keep an eye on this. Remember, it's not a good idea, my friends. Keep your positions open during the weekend, because you never know what could happen. And in any case, if you do so, most of the traders usually do it using hedging positions just to cover the risk. Okay. NASDAQ 100 is one of the index that is doing super well. Take a look. It's beautiful. It's rising to 15,500 points monthly. And again, it's escaping the lines. If you take a look, it's completely different situation from SP 500. SP 500 was breaking up the 200 moving average, breaking up also the trend there, but also it's I would say like around 200 points, 150 points above the maximums, comparing with the SP 500 that is actually doing a kind of new, you see, double shoulder here. We got these levels, 4,425, and we are just touching those areas now. But in the case of NASDAQ, it's already 150 points over the last maximum here. Is that means like actually the market is discounted that the price is gonna keep rising because NASDAQ 100 is going further? Let me show you Russell 2000, because actually Russell 2000 is giving to us different version of the story. As you can see, Russell 2000 is doing the same movements that SP 500 and NASDAQ, but in this case, price is not recovering the moving average of 200. Is not even recovering the moving average of 55 periods, and is definitely not going above the neckline like SP 500 and like NASDAQ. Therefore, Russell 2000 is giving to us actually contrary indications, like it's completely doing in the opposite direction. He's going in the opposite direction. He's just turning against the SP 500 and NASDAQ 100. So be careful and watch out and follow this index, because many times Russell 2000 usually is taking the initiative, let's say, the initiative in the market before we face the moves for the coming days in the in the next index, in the biggest index. In the case of Euro, we got DAX, etc. DAX 40 doing well because also breakout of all the levels of the 200 moving average period, 55 moving average period, also breaking up the bearish trend that is here, super well defined. Probably next steps is try to extend the price to the levels of 15,500. This area more or less will be the target. Once is the story changes, because as you can see, it's a massive support in that area, and therefore now it's a massive resistance in that area, 15,500 points. We are right now in 15,316 points. So watch out the next week, those levels. Let's take a look also on, we got here Nikkei, Japanese market doing really well in Asia. And similar patterns like the American market, surprisingly, but still I will say it's more positive. It looks more strong. The movement at SP 500 is between SP 500 and NASDAQ. The movement is very similar, but it shows a little bit stronger than SP 500, this movement. I would like to also share with you the price of euro dollar. Is kind of interesting because it's right now making a movement that is suspicious. We don't know if it's going to continue falling to the level of 106 maybe, or it's actually make base here and keep attacking new highest positions in 107.50 more or less. I believe, consider the last comments from the Federal Reserve, we could expect actually a market dropping, a dollar rising, and also euro dollar falling against dollar basically, and even a gold that is getting cold. The gold is reacting in line with Federal Reserve comments. Euro dollar is not giving a very strong reaction. Actually, if we check also the dollar index, is still in 105 points. Doesn't show any particular strength. If that will be the case, we will see also going the index dollar to 106.50 points probably. It's not the case so far. It's 105.80, trying to survive above the 200 moving average. So that's why I believe that whatever it is going on, the market is not buying the position of the Federal Reserve right now. They don't take in serious the comments made by Jerome Powell. I share on my social networks those comments this morning freshly from yesterday. So please, again, if you want to find on LinkedIn, you're gonna check this every morning post freshly on my profile, LinkedIn, Gonzalo Canete. In terms of gold, again, you see it's falling, it's getting cold, $1,936 per ounce, and it's a natural reaction because if the dollar and the US economy are doing well, and we see that actually the market is rising, there is no reasons to find or look for hedging, look for safe havens. In this case, gold was rising a lot a few weeks ago because of the Israel intervention in Gaza, and now we can see that the reaction, the expectation that Gaza conflict with Israel it's over, is making gold getting colder and colder and drop. So that's why I think that we are facing kind of normalization on the market after these few crazy weeks of risk of global war between Russia, China, Iran, with US, England, NATO, basically Israel against the neighbors and so on, right? It was crazy, and it seems to be over. So fingers crossed. In terms of oil, very similar situation. Is dropping like gold. Now it's rising for the last few hours, yeah, but still you can see a massive drop from the previous seasons. Since last week, we have been just dropping. Even by the middle of this week, it was around $75, and it was really strange to see this massive drop. Why I say it's strange? Because we know the countries who produce oil, and in particular Russia and Saudi Arabia, are insisting to reduce the offer of oil in the global market by exportation, by production, by in both cases reduction, just to reduce the offer on the global market. In the other hand, US is getting out of reserves. It's just burning the reserves of oil. I share on my profile also a chart showing to you clearly that we are in minimums of 30 years in terms of oil reserves for United States, strategic reserves. because the government of US is trying to keep the market cold. Why? Because if the oil market is rising, inflation gonna come for sure. So that's the main interpretation of this situation. That's all. I think we have seen. We only gonna take a look on Bitcoin by the end, but that's it. That's it. It's a very interesting market because obviously what we're facing right now is a very optimistic market, and we also have seen the last 2-3 days many comments from different members from Federal Reserve trying to make the market aware of this kind of euphoria. Just try to bring the market back to the earth and probably calm the feelings on this bullish market for the last week. And as you can see, Bitcoin is doing amazing. It was touching the $38,000 per Bitcoin, and it's in long term. If we go to daily candle, we will see that it's actually in a bullish trend and doing super well, regardless what the market is doing. We got a Bitcoin which was rising during the bearish markets a few weeks ago with this threat of escalation of the Israel conflict. Bitcoin was rising. Now we see the market is rising, Bitcoin is keep rising. So it means Bitcoin, whatever is the scenario, is resisting, is doing really well, and is working really good as an asset. Okay, I think that's all. I hope to see you next week, the next reports. And if you like this one, please give me a like, leave me a comment, or even contact me through the social networks to request any kind of market or comment you would like to do. I can make a video about any particular asset you would like to see. Just contact me. I'm here for that. Thanks for watching. Take care. Bye-bye.